Hello everyone, and welcome back to the channel. Today, we're talking about something that could fundamentally change how you invest in stocks, bringing the world of traditional finance and blockchain technology closer than ever before. Imagine trading company shares not just during market hours, but around the clock, with potentially lower costs and faster settlements. This isn't science fiction. It's the ambitious future that Coinbase, one of the biggest names in the crypto space, is actively pursuing right now in the United States. Coinbase is attempting to secure a green light from the U.S. Securities and Exchange Commission, or SEC, to allow its users to trade what are known as tokenized equities. This is a monumental undertaking for the company, described by its chief legal officer, Paul Grewal, as a huge priority. If successful, this move would propel Coinbase directly into the realm of traditional stock trading, positioning it as a direct competitor to established brokerage powerhouses like Robinhood and Charles Schwab. So what exactly are these tokenized equities? In simple terms, they are digital versions of regular company shares. Instead of holding a traditional stock certificate or a digital entry in a brokerage account, investors would hold virtual tokens that digitally represent these company shares. These tokens function very similarly to cryptocurrencies, meaning they can be exchanged and tracked on a blockchain network. This innovative approach promises to unlock several significant advantages for investors. For one, it could lead to a dramatic reduction in trading costs, as the blockchain infrastructure streamlines the process by cutting out many intermediaries. Secondly, it offers the potential for near-instant settlement of trades, a stark contrast to the multi-day settlement periods common in traditional markets. And perhaps most exciting for many, tokenized equities could enable 24/7 stock trading, freeing investors from the constraints of conventional market hours and allowing them to react to global events at any time. However, the path to bringing tokenized equities to the U.S. market is far from straightforward. As it stands, these types of digital assets are not currently permitted for trading within the United States. To proceed with its plans, Coinbase would require a special form of permission from the SEC. This could come in the form of a no-action letter or exemptive relief, which essentially means the SEC would commit to not taking legal action against Coinbase if it moves forward with offering these products. This regulatory comfort is absolutely critical, as the lack of clear guidelines has been a significant barrier to institutional adoption of blockchain-based financial products. Another substantial hurdle for Coinbase is its current registration status. The company is not registered as a broker-dealer, which is typically a mandatory requirement for any entity wishing to offer stock trading services. This very issue led to the SEC suing Coinbase in 2023, alleging that the exchange was operating as an unregistered broker-dealer. However, the regulatory landscape has seen a notable shift since then. Under the new Trump administration, there has been a discernibly more crypto-friendly stance within the SEC. This change in leadership and policy direction has already resulted in the SEC dropping several lawsuits against major crypto firms, including the one against Coinbase earlier this year. This dismissal has undoubtedly fueled Coinbase's optimism about launching new regulated products. Paul Grewal himself has publicly stated that the company has been advocating for the SEC to enable markets for tokenized securities since the beginning of this year, emphasizing that this isn't sudden news, but rather a continuation of their long-term strategic push. The SEC, under this new administration, has shown indications of being more open to exploring innovative approaches. There have been discussions about the possibility of regulatory sandboxes or innovation exemptions that would allow crypto exchanges to experiment with new offerings like tokenized stocks within a controlled environment. Furthermore, recent dialogues within the SEC and the Commodity Futures Trading Commission, or CFTC, suggests a growing willingness to modernize financial markets. This openness has partly been influenced by the demonstrated success and strong demand for crypto-backed derivatives and perpetuals in the U.S. markets, which have shown that digital assets can attract significant interest from both retail and institutional participants. While Coinbase is determined to lead the charge in the U.S., it's important to note that some rival crypto exchanges are already experimenting experimenting with tokenized equities, albeit outside of the American market due to existing regulatory constraints. For instance, Kraken, another major player in the crypto space, announced plans in May to launch X stocks, which are tokenized versions of popular companies like Apple and Tesla, for users located outside the U.S. Kraken has also been expanding its commission-free stock trading services in various parts of the world, highlighting a broader industry trend towards integrating traditional financial assets with blockchain technology. Similarly, Binance, a global crypto exchange, had previously offered tokenized stocks on its international platform in 2021, though those efforts were short-lived due to regulatory obstacles. This history underscores the significant regulatory barriers that have existed, and the current efforts signal a renewed push in a potentially more receptive environment. The SEC's decision on Coinbase's proposal will be closely scrutinized, as it could establish a crucial precedent for how tokenized financial assets are regulated and ultimately integrated into the broader U.S. financial system. This isn't just about a new product offering, it's about potentially reshaping the future of finance. The ability to trade fractional shares, coupled with 24/7 markets, could challenge the long-held dominance of traditional brokers and force incumbents to rapidly adapt to this evolving technological landscape. While critics do point to challenges such as potentially low liquidity in nascent secondary markets and the ongoing absence of clear global standards, the momentum behind crypto-integrated financial products is undeniable. The real-world asset sector, which includes tokenized assets, is one of the fastest-growing areas in decentralized finance, demonstrating a clear demand for these types of innovations. Coinbase's chief legal officer, Paul Grewal, has clearly articulated that obtaining this regulatory clarity and comfort is essential for broader institutional adoption of blockchain in finance. While he has not yet confirmed whether Coinbase has formally submitted an official request to the SEC or provided a definitive timeline for when tokenized stock trading might launch, the company's intent is clear. They are eager to be at the forefront of bringing this financial innovation to the U.S. market, pending the necessary approval from Washington. This move could be transformative for Coinbase, opening up a massive new revenue stream and fundamentally redefining retail investing. It represents a bold step towards a more interconnected and efficient global financial system, leveraging the power of blockchain to enhance accessibility and speed for everyday investors. The coming months will reveal whether the SEC will grant Coinbase the permission it seeks, potentially paving the way for a new era of stock trading in the United States. Thank you for tuning in today and staying informed about these crucial developments in the world of crypto and finance. If you found this video insightful, please give it a thumbs up and consider subscribing to the channel for more updates and breakdowns like this. We'll continue to keep a close eye on this story as it unfolds. See you next time!